This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. Today is Thursday, July 10th, 2008. Well, the dollar was off to a good start this morning in early trading, but stumbled and fell as we headed deeper into the U.S. session. The greenback slide picked up the pace just as Ben Bernanke and Hank Paulson began speaking in front of the Senate Financial Services Committee, but we see that more as a coincidence than a catalyst. The Fed Chairman and Treasury Secretary were addressing regulation in financial services rather than speaking directly about growth or monetary policy. The only data due was the weekly jobs claims report, which came in much better than expected. After jumping to 404,000 last week, we saw a drop back to 346,000. However, we warned that continuing claims continued to rise, topping 3.2 million. This number is trending higher, which is indicative of a recession. Adding insult to injury, Bloomberg today published a report showing that economists expect consumer spending increases will disappear and growth will stall next quarter. Some refer to the situation as a perfect storm brewing, with housing declines and job losses mixed in. Additionally, these economists disagree with traders betting on a rate hike by December, saying that the Fed simply isn't in a position to act until next year. We consider this report quite a blow to the dollar bull camp. Finally, the cherry on top was a $5 rally in oil, bringing the price per barrel back above $140. On the technical front, things are not looking so hot for the buck right now either. With any follow-through in today's selling of the dollar, and the euro may test last week's high in the final 24 hours of trading. Another top performer is the Aussie dollar, after Australia last night reported an increase of 30,000 jobs and a drop in the unemployment rate. The Aussie dollar may be on track for another 26-year high as it approaches 97. The pound sterling was the weakest of the bunch today, after outperforming most other majors yesterday. It's not entirely clear why the pair makes such large sudden runs back and forth, but we do foresee more trouble for the pound as the UK economy experiences greater turmoil. The dollar CAD is now trading right near its 50 and 100-day moving averages, just below 101. This pair has been in a relatively small range all year, with lows some 300 points away. If oil finds itself near $150 or higher in the days ahead, we may see this pair again below parity. Also, Canadian employment figures will be released at 7 a.m. tomorrow morning. Until then, have a wonderful night trading. Take care.